I want to thank each of you for what you do in your communities, in your businesses. Being a leader takes a lot of work, ongoing learning, patience, and grit. And so thank you for what you do here in Traverse City. Founded in 1887, the MBA is a trade association representing banks of all sizes, 104 member institutions with over 2,300 branches across Michigan and about $150 billion under assets. Our mission is advocating for and supporting banking. Our main areas of focus being advocacy, professional development, and education, and products and services for our members. Banks support the economy here in our state with consumer business and other loans, and providing more than 30,000 people with a rewarding place to work. When you boil it down, though, it's really about education and relationships for us as a trade association, educating our bankers on regulations as they change and career development, but really spending a lot of time with elected officials educating them about our business. So I heard you mention you were the pharmacy. You probably do some of the same thing with the Pharmacy Association and other trade groups that you all are with. With 58 new friends in Lansing under the dome, with term limits extended a little bit longer, thank goodness. 58 new friends in Lansing and 3 new members of Congress. That keeps us pretty busy sharing about banking. Norm's had a pretty busy day today. He facilitated some time over at the Northern Michigan Policy Conference. Did I get that correct? I know some of you were there as well, so thanks for making both spots with Senator Peters talking about some of the banking issues. So appreciate that as well. When you think about banks, looking back just a couple years into the pandemic, banks across the state, and so many of you in this room, really stood up to help during Michigan's time of need. In a time that was completely consumed by understanding and functioning in a pandemic, one would never have predicted the amount of engagement that was needed in communication, in public policy, and regulation between not only federal and state, but also in and increasingly more time with local governments related to the banking industry. Strategic partnerships bridge gaps in understanding, creating policy solutions, and demonstrating the immense value of the banking industry and its impact on individuals, employers, communities, and our economy. We even worked with the state government to ensure that banking was deemed essential. That was a very important adjective early in the pandemic to ensure that our members could serve you, their customers. Bankers really stepped up to ensure that the health crisis did not become an economic crisis. Hopefully many of you were participants in the PPP program. That was a less than optimal rollout that was announced and rolled out just a couple days later. Never attempted before, deploying billions of dollars across Michigan, assisting again with the Paycheck Protection Program, PPP. We really spent a ton of time with the Small Business Administration and with our congressional delegation, really a 24/7 undertaking. When you think about what it meant in Michigan, the PPP was part of a $2.2 trillion economic stimulus package. Again, an unprecedented and successful program intended to help small businesses and their employees affected by shutdown and economic dislocations caused by the pandemic. Here in our state, Michigan banks approved 291,000 loans in that program. There were $24 billion that were deployed into those businesses, and of those 291,000 loans, 261,000 were forgiven. You know, those are numbers that we know. We don't know how many of those 290,000 businesses might not have survived without that help. We don't know how many jobs were preserved, and we don't know how many gallons of milk were kept on tables in Michigan. But it sounds a little hokey, but it's not hokey, it's the truth. What the bankers in this room who worked on that program did was really heroic, keeping people in their jobs, the businesses open, and milk on tables. Over $23 billion of those loans were forgiven. 4 of 5 of those loans were made by banks. It's interesting to note that 83% of those dollars went to companies that had fewer than 10 employees, so really to small businesses who needed those, and the average loan size was just under $69,000. Banks, of course, have a stake in the economic growth, health, and vitality of the communities they serve, really being only as strong as the communities they serve. I think community banks in particular have a unique role, being that indeed they are small businesses themselves. Sometimes we forget that, but they're small businesses themselves. Providing Michiganders with loans, checking and savings accounts, and other products to help create stable, prosperous communities. The credit banks provide to small businesses help them to not only get started, but to grow, prosper, and expand. And again, over 30,000 people work in the banking industry in our state. 9 in 10 Americans say that they are very satisfied with their banking relationship, and 96% rate their bank's customer service as excellent, very good, or good. Jordan and I were talking about customer service at the Pancake Place a little bit earlier today. Is that place still open? Unfortunately not. There may be a need here in Traverse City for a new pancake joint. There's no place more safe and secure to keep your money than in your local bank. Not a penny of FDIC-insured bank deposits have ever been lost. We all work hard to earn and to save. Banks have an aggressive fraud protection program in place and fraud monitoring. Cybersecurity is very important. Senator Peters was talking with us about cyber today. As chairman of the Homeland Security Committee, that's a big deal for him. He shared with us, I think the number, Alex, was that about 30%, only about 30% of fraud is reported, so there's a lot that goes unreported, so it's important to have safeguards in place. Loans and credit that banks provide to small businesses help them to get started, to grow, and to prosper. Banks are the largest supplier of credit to both farmers and ranchers as well. We mentioned PPP. Banks were flooded with deposits during the pandemic because when those checks came, you had to put them somewhere. During that time, the growth in liquidity was further supported by both consumers and commercial customers who are holding greater cash balances, again, related to the government stimulus, either through those individual stimulus checks or through the PPP program. Loan growth decreased some in the beginning of the pandemic, but we're now seeing that on the uptick, and several of the lenders I talked with in the room were reporting good demand there as well. It's interesting, during the pandemic, the weekend that the state was closing down, we spent a lot of time on the phone with leadership in Lansing and with the entire congressional delegation saying, you're likely to get questions from your constituents who have uncertainty about how they're going to pay their mortgage or how they're going to pay their loan or whatever. And we recommend Congressman Bergman or Senator Stabenow to have them call their banker, call them early so that they have that relationship. Really, defaults and foreclosures were just so low during that time, and they have continued to be so. I see nods from my banker friends. It's really been fortunate during that time. Bank reserves are trending down a little bit, but still remain 42% above pre-pandemic levels. And it's important to note that the Michigan banking industry remains well positioned to withstand potential turbulence in the economy. One thing that we hear about when visiting with our banking members, our chairman, Jerome Schwinn from down at Isabella Bank, and I have made about 50 bank calls since he started as chair in July. And retaining and hiring talent is a challenge. I think it probably is for most every industry. There have been some gains in leisure and hospitality, healthcare and education, and construction and manufacturing, although growth has been weaker for the retail trade and transportation and warehousing sectors. Unemployment has hovered around 3.5% since March of 2022. While we've heard news of layoffs in some sectors, many other businesses are still navigating those challenges as they are, as I mentioned, in our banking industry, both from the perspective of employees' retention and filling vacancies. Some of that pent-up demand is beginning to ease, and we heard that some in some of our bank visits this week. The headline decline in transportation and warehousing was driven by a drop in warehousing and storage and couriers and messengers. However, there was solid growth in both air and truck transportation and transit and ground passenger transportation. While the headline financial activities posted solid gains, there was an annual decline in the level of employment for credit intermediation. Earnings growth was also strong in 2022, which in combination with the extraordinary fiscal stimulus we've mentioned, which padded personal savings, helped drive continued strong customer spending in the face of historic price growth. Despite earnings being strong from an historical perspective, it has not kept up with the rate of headline inflation. In December, average hourly earnings for private workers increased 4.6% year over year, while prices grew at about 6.5%. This has eroded household purchasing power, which can be observed in the changes recorded in the personal savings rate. There was a high in April of 2020 of about 34%, but I think that's when those checks came, direct deposit, right, or in the mail, down to about 2.4% in November of last year, well below the 7.3 pre-pandemic average. Average hourly earnings grew 0.6% in November, up about 5% from last year. Again, the savings rate is as low as it's been since August of 2009. October, the rate was about 2.3, close to the all-time low savings rate of 2.1. We're beginning to see consumer credit, revolving credit, credit card debt rise as well, as people have turned increasingly to credit cards to manage their monthly expenses, like filling up at the pump and paying rent, et cetera, especially for the lower end of the income distribution, who more quickly burned through that excess savings built up during the pandemic. Higher rates are depressing mortgage loan demand as well. Demand for homes remains high depending upon the market. Many would-be buyers are either staying on the sidelines until rates may come down or no longer can afford homes due to the combination of high rates and the incredible price appreciation. We are seeing price appreciation slowing some. I don't know if you're seeing that in this market. Housing affordability has significantly eroded due to high prices and rates. I know last summer, having dinner at the Artisan, the server told us that it was tough finding a place to live in Traverse City, and she was driving 40 minutes home for affordable housing. As home affordability has deteriorated, more people have been pushed into rental markets, which drove strong inflation in the shelter component of the Consumer Price Index throughout 2022. Food prices are also rather volatile, as we've seen with eggs recently. Has anyone noticed the price of eggs? That was one of my first jobs. My grandparents had, Mongan had 10,000 chickens. I was trying to remember, they were not Rhode Island Reds. I want to say Kentucky was I can't think of the name. I should have called my dad this morning. But we had 10,000 chickens, and as they were shutting the business down in 76 or 77, that summer, between first and second grade, I graded eggs. So I stood on a ladder back chair. By the time I was too short to get the basket of eggs up without a catastrophe. That only happened once. And when we had a surplus of eggs, we sold them 2 dozen for $1. So that's quite a price change. And with that money, I wanted a beanbag chair. Beanbags were really big. Y'all remember beanbag chairs in the 70s? And so I went to Warrenton Furniture Exchange, and Mr. Gardner sold me the bag. It was $41 on credit. I still have the receipt. And I went in every week. I think I made $7 working for mine. I gave him $5. So that was my first credit experience. A little aside there. Okay, we have seen some encouraging signs that price growth for food is slowing down, hopefully in eggs. However, prices still remain significantly elevated across the board. Energy has been one of the few bright spots and the primary contributor to the slowdown in inflation in recent months. This is obvious in both the recent change in the year-over-year price growth for both gasoline and diesel fuel. We also saw significant price increases during the pandemic in automobiles, both new and used. Similar to housing, The combination of rising rates and limited inventories have eroded affordability. Of course, we know the chip shortage was a big part of that. There's plenty of inventory of Cadillacs and Camaros parked in Lansing waiting for those chips. The average monthly new car payment increased to $636 at the end of 2022, up from $582 at the end of 2020. As a result of these pressures, and from the slide before, we've seen that growth in new car prices slowly fall and the cost of used cars actually decline year over year. We expect the Fed to remain tough on inflation, although I have no prediction as to what rates will be announced next quarter. When you think about banking, the Dodd-Frank Act was really the biggest rewrite of financial regulation in decades, which came out in 2010. It was approved along party lines and spanned more than 2,300 pages. That's like 5 reams of paper. And implemented more than 400 new rules and mandates. In May of 2018, the president signed 2155, which was the Economic Growth, Regulatory Relief, and Consumer Protection Act, into law. It received support from both the Dems and the Rs and represented a more common sense approach to tailoring regulations to a bank's risk and business model. It contained provisions supported by the industry and aimed at preventing a repeat of the financial crisis. It also contained many unrelated provisions that make it harder for banks to serve their customers and communities. While bankers support many of the reforms in Dodd-Frank, including supervision of the shadow banking industry, there are layers of ill-fitting regulations that have applied to the whole industry, making it more difficult for customers to buy a home, to expand a small business, or achieve other important financial goals, restricting the ability of banks to promote economic growth. Just think about the number of signatures you have to now execute when you have any type of loan with your bank. The most unfortunate aspect of Dodd-Frank is that it increased regulation to such a degree that banks' first attention is less towards serving the customer and more to ensuring that they are compliant with federal regulation. Thanks to collaboration between banks and merchants, consumers today have many options for making payments, whether it's by cash, card, smartphone, or smartwatch. Security features like EMV chip technology, biometrics, tokenization, geolocation, these are terms that I did not learn at Warren Academy in the 70s, and end-to-end encryption are making payment transactions safer and data more secure. These innovations give consumers and businesses more choices than ever, enabling them to make or to accept payments in a variety of forms, really 24/7, 365. But there's also a concern, we mentioned cybersecurity earlier, in the increase in fraud in various payment systems that operate outside the normal regulatory framework of banking, such as Venmo, Zelle, the Apple Pay, and others. All these payments can often be made on apps on a consumer's cell phone. But what happens if there's an unauthorized transfer? Where's the liability? Should the bank bear any? Underlying laws and regulations are really not clear, and so we're working hard with Congress to ensure that they are made more clear. When you think about regulation of banks, we are one of the most highly regulated industries in the country. Certainly in some instances regulated by more than one entity, whether it's the Federal Deposit Insurance Corporation, a primary regulator of about 3,200 banks in the country, the Office of the Comptroller of the Currency, or the OCC, which regulates about 1,000, the Federal Reserve, which regulates about 724 holding companies, and then there are the different state regulators in each state as well. Regulators do good work, though. They assess a bank's financial health and regulatory compliance through extensive on-site examinations and reports to ensure that they are operating in a safe and sound manner, which is good for both the bank and for you, the consumer. Banks will continue to be focused on fair lending to ensure that access to all without discrimination is done. When we think about artificial intelligence, that's another term that I didn't learn growing up in school. Artificial intelligence has the potential to dramatically reduce cost and increase productivity in the financial services industry. It has broad utility. It can help banks extend credit, enhance the customer experience, improve fraud detection, lower the cost of offering services, and more. With widespread adoption of artificial intelligence, there does come challenges, including a lack of regulatory clarity, complex systems integration, and a need to develop niche expertise before incorporating that into the bank's platform. Cryptocurrency. I don't know how many of you are involved in cryptocurrency. I am not nearly as knowledgeable there as I should be or need to be. When we were here for a conference last spring at the Grand Traverse, two of the servers were asking me what bank I worked for, and I said really all of them, and they were telling me about their involvement in cryptocurrency. They said, we still bank with X, but they said they were both involved in cryptocurrency. And I was just amazed at how broad the interest is there from the servers, the banquet servers there at Grand Traverse. Certainly it's a challenge enough to understand what Bitcoin and other digital assets are, how do they work, how do you make money, what are the risks, much less to figure out the compliance implications. Consumers are increasingly demanding access to these types of investments, and some banks are beginning to explore ways to perhaps offer. The banking industry certainly has a long, proud history of embracing innovation, and today that's how banks are approaching crypto. So it'll be interesting to see where this goes in the next few years. Cannabis banking. I don't know that my parents would ever have thought that I would stand up and talk about marijuana in a positive way. 4 or 5 years ago, we had a press conference at our office with the Cannabis Association. And what is the lady's name who leads that, Alex? Robin? I think her name is Robin. Robin came in with this big placard of a marijuana leaf, and she wanted to put it on my podium. And she said, can we put this on our podium that we're going to, and I thought, I'm going to put that on the Bankers Association's podium. And I said, oh, heck yeah, let's do it, because we need to get this done. Because in 37 states, the District of Columbia, Guam, and Puerto Rico, there's at least some legalized usage of marijuana. Yet the possession, distribution, or sale of marijuana remains illegal under federal law, which means that any contact with that cash that can be traced back to state marijuana operations could be considered money laundering, which banks really don't want to get into, and expose a bank to significant legal, operational, and regulatory risk. So in addition to growers and retailers, there are vendors and suppliers, landlords and employees who are directly tied to the cannabis industry, thus posing legal risk for banks serving those entities and individuals, as indirect connections to marijuana revenues are hard, if not impossible, for banks to identify and to avoid. So there's been a rift between the federal and the state laws here that have left banks kind of trapped between their mission to serve the financial needs of the community and the threat of federal enforcement action. So we take no issue on the moral issue, we take no position on the moral issues raised by legalizing marijuana, so I can say that to my mother. The growing number of states that allow sale and use raises practical issues that must be addressed. The NBA believes that it's time for Congress and the regulatory agencies to provide greater legal clarity to banks operating in states such as ours, where marijuana has been legalized, and will continue to advocate for that. The House has passed the Safe Banking Act on a strong bipartisan basis, I think 8 times, but it has not yet passed the Senate. Senator Peters told us this morning that he was with us. We know that Senator Stabenow is as well. And I think there are now 41 states who have either medical or recreational or some combination. So we hope to have that loophole closed very soon. Banks have made really remarkable progress in financial inclusion. Last fall, the FDIC released its latest financial inclusion survey. It showed that by 2001, only 4.5% of Americans are unbanked, don't have a banking relationship, which is a record low. The 17% decline in that number since 2019 shows a concerted effort by the banking industry, government agencies, and community groups to make a meaningful difference in expanding access to banking services, even in the middle of the COVID pandemic. FDIC Chairman Marty Gruenberg specifically singled out the industry's effort for contributing to this improvement. In particular, he and others have highlighted the growth of affordable, easy-to-use bank-on certified accounts, which we strongly support. There are a number of banks across the state and indeed across the country who are offering these lower-cost accounts to help people who have not been in the banking system to come into the system. We also communicate financial inclusion through a collaboration with the City of Detroit, community stakeholders, and other financial institutions in Mayor Duggan's Bank On Coalition, and a number of banks spend a great deal of time, effort, and resources in financial education of their customers and students as well. When you think about diversity, equity, and inclusion, certainly greater buzzwords in the last couple years than in the past. The banking industry is really committed to diversity, equity, and inclusion, and we are helping banks of all sizes in their DEI journey, because it is a journey. It's not an overnight kind of deal, not like flipping a switch. By providing the resources and training they need to enhance their programs, we recognize that diversity is vital to a bank's business, and banks understand they are only as strong as the communities they serve, including diverse aspects of those communities. They continue to invest in employees and customers from diverse backgrounds. While tapping into the potential of those communities, banks provide necessary links to the American dream. Many banks have instituted comprehensive programs to cultivate a diverse and inclusive environment for both their employees and their customers, and are recognizing with even greater efficiency economic inequality, and are prioritizing the needs of those harmed by systemic inequities. We recognize that racism and discrimination have no place in banking or really anywhere else. Banks across the country have made significant commitments to expand their support for programs and initiatives promoting racial equity and economic empowerment for all communities while creating more inclusive opportunities for success. Your local bankers are there to help in all of your families and your business's milestone events. Thank you for giving me an opportunity to come and visit with you today. It's great to be in Traverse City. I won't climb Sleeping Bear Dunes today. There probably won't be any time for antiquing. And I don't think I had a cherry at lunch today, but it sure was great to be with you.